We just had big bank earnings come out this morning, and they beat on the top and bottom lines for JP Morgan, Wells Fargo, and Citi. This is partially because the consumer is stronger than expected and businesses are stronger than expected, given the economic headwinds and high inflation that we're seeing. The markets initially acted well to the big bank earnings. However, JP Morgan CEO Jamie Dimon, who's very well respected in terms of what he says there are also some risks to the economy in terms of the geopolitical tensions in Ukraine and the Middle East with Hamas's horrific attack on Israel. He said this is the worst geopolitical situation he's seen in decades. However, the markets traded a little bit down after that, but I think the market started to recover shortly after because Fed official Phil Harker pretty much said that the Fed, in his opinion, he thinks the Fed should be done with rate hikes because the Fed's rapid pace of rate hikes starting from last year into this year, we have to see the lagged effects of that and the rapid rise in bond yields that we saw in the last 2 months is doing a lot of the tightening in the Fed's work for itself. And then one other note that's very important, a lot of people aren't realizing, is that 1 year ago this week, the October 2022 bear market bottom was in. And at that point, it was because we saw peak inflation, or not necessarily peak inflation, but inflation was a lot higher than we wanted at that time. And now the market is a lot higher than it was then, despite a lot more fear, especially with the geopolitical tensions around the world now. So that shows that the market is resilient, the fact that it's higher now than it was then. Obviously, for stock market investors, this feels pretty painful because we're at levels from 2 years ago. There hasn't been much movement from 2021. So there's definitely some pain felt. And although we saw the rapid recovery, the time that it took, it's almost like time capitulation is a little tough. And a lot of investors are giving up. But the good news is we're considerably higher than we were last year for the October bottom. And although this is a weak bull market recovery in terms of history, usually the second year of a bull market recovery is pretty strong. Hopefully that holds. Obviously, if there's a shock event, that might put that at risk. But hopefully the stock market continues to have a strong fourth quarter. Let's see.